Hello friends, this is Vladimir and this is the weekly review for actually the first week of June 2013. This is the second of June, of course, beginning of the week. Well, previous week was very interesting. The week started with some ups on the indices that tried to go all the way up again, then down, then up again, and finished with a very dramatical move on the last candle before closing of the week. You see that? That's Dow Jones. Alright, I can go and show you more and more. This is, for example, the S&P, and this is, for example, the Nasdaq. This last candle of the week, we saw a drop down. The big question is, why? What happened that caused such move? I would not say this is something dramatical and coming or anything like that. I would just say this is May. The end of May, actually, on last Friday. A week ended and a month ended. From my point of view, that was a pure position closing from the traders, from the investors. But the biggest question is, how much did they close? Right? Or actually, what do they have in their mind? Is that close? Is the beginning of the down move I'm talking about for some time now? Or is it just a position closing before the end of the week and the end of the month? Of course, only time will tell. But it was definitely very interesting, and I will elaborate a bit more about indices later on this review. Before I go with the opportunities I have on my list for the upcoming week or some upcoming period, quick update about some pairs I've been talking about for 2-3 weeks now, and some pairs I've been talking about even more. The first would be the pound against the New Zealandian. You remember me talking about this monthly divergence, right? And you remember me saying it will take some time, but the pound New Zealandian will be here again. I expect it to happen somewhere around 2015-2016, so this is pretty long time from now. But we were talking about this range, if you remember, and we expected the up move from somewhere like 180, 175. I told you it could drop even to 170 or maybe even a bit lower, but the rise up is only a question of time, and you have to start to invest in this pair. Take a look what happened since then. From around 180 we got a rise of over 1000 points already. Well, my opinion is still bullish, and I think it will take us at least until this range, which is the gap. There was a gap that never closed here around 196. This will be the first target. The second target for long future, will be here. Guess why? A gap again. Let me enlarge it. You see that? That's the gap, and that's around 207, 208. In other words, to make long story short, I am very bullish about this pair. Every drop down should be an opportunity to buy this pair. As I said, 196 would be my first real target. 207 would be the second target. For those of you who trade like investors and plan to hold, go all the way to here, 240 as a target. But as I said, don't be surprised if it will take us all the way until 2015, maybe even longer. I wish I'm wrong. I wish it will be like in 2 months, but most likely it will not. Most likely it will take some time. I will not be surprised at all that we'll see that here again. So, pound New Zealandian, if you are still out of this soaring move and running train, fast moving train, sorry, train cannot run, right, me and my English, sorry. So just look for buy opportunities from the dips, or how I call it on the book in Amazon, buy the valleys. that's about this pair. Now I've been talking about Australian, New Zealandian as well, and for a pretty mid term I am talking about the opportunity to buy, right? And I told you every new low that will be created around 119, 118, maybe even lower should provide a new buy opportunity. I'm still on a very bullish opinion. I still think it should take us back to 121, 50, 122 range, and then I will not be surprised if we will see that again here around 123 before the next drop down. Why? First of all, why do I think about this up move? Well, you know my opinion. That's a bullish divergence, right? And the divergence actually started here. Okay, that was the first time we saw a divergence, and from here the prices never reached the 20 MA. Then they moved down and up again, testing this level, but after 1, 2, 3, 4 lows in a row, it could go and take us up to this level again. That's the 121.50 up 122 range I am talking about. Why it's a range? Because you know my opinion. You cannot ever put a finger on the exact level. And that's why I think it's going to there. What will happen from there? It will be very, very interesting to follow. It could break it up and continue a bit more to 123. Then I expect a drop down. Why a drop down? Watching on a monthly chart, right? It's pretty impressive breakdown of the Bollingers, which means for long run we can go for duplication. There is also a trend line. If we measure that something like that, okay, through the spikes, it could take us down to 112, 110. Watching on a weekly chart, right? We can see that the market here is moving. When it's moving down, it's making waves like that. 2 waves completed. See that? 1, 2. This 2 was long, but that's pretty much the level. Now, after some retrace, I would expect it to do another wave down. This pair normally, if you go back on history, if it's up or if it's down, it's moving on waves. When it moved up, its up moves are pretty bigger than the down moves. Okay, as you can see. Okay, that was the second, and that was the third when it started from here. Pretty much, of course, not exactly, right? It's making actually 3 moves, and this pair is famous by its 3 waves, and that's why, again, as I said, I do expect it to correct more, maybe even more than 123, but then I do expect it to continue to the downside. What should we pay attention to? Take a look here. Okay, we have several important news coming from Australia this week. It starts with the retail sales, actually tomorrow on Sunday. It continues, sorry, with the cash rate on Tuesday, and we have also the GDP on Tuesday. So pretty important news. The trade balance from Australia that should affect this pair. How exactly? As I said, in my point of view, I'm still on a bullish opinion, and I still think every dip should be taken to the upside. I do say that going higher until it creates some continuing divergence here, and then make another drop down. That's my opinion. So for those of you who joined that, that's what I would expect. If for some reason we get a clear stop here around this stop, and after several, not one, after several bad news, if they will come, maybe it will be time to get out, or at least cover that with sells to enjoy the next cycle, okay, before getting rid of the sells and adding more buys for a long run. And so this pretty much the pairs, the long trades opportunities I was talking about. And now let's go for the opportunities for the upcoming week. Australian pairs. Well, many things to happen in Australia this week, as you saw, but one thing is positive already. Take a look here. That was the end of the previous week, and we can see the manufacturing PMI, despite of the bad expectations to take it down below 50 for the first time, it still holds above 50 and actually turned better than the previous time. In my point of view, it is a bullish sign for the Aussie pairs. Why? We know that Australia is affected very much by China. Good news from China could and should help to the Australian pairs. Aussie Kiwi, in my opinion, it's time to talk about the other pairs. Euro Aussie. Euro Aussie has more than 20 candles right. Take a look here. You can see here on this indicator a clear ride of 20 candles. More than 20 candles. 35 candles right. From this break, we get more than 20 candles. There is a wonderful continuing divergence forming on the daily chart, and there is RSI playing around it extreme. Watching on the monthly chart, my opinion was and stay bullish. I expect it to continue higher, much higher. I do think, first of all, we will see pullback, and this pullback, in my opinion, is about to begin in about 1 or 2 weeks. Watching on a weekly chart, there are several resistances waiting for us right here. Watching on a weekly chart average through range channel, we are out of weekly and out of daily channel. That's why, in my point of view, Euro Australian is an opportunity to sell. Go and make a sell with a daily candle pattern. Our target will be the opposite band of the Bollingers. Why? Because of the 20 candles plus right. You want to be conservative, take a 4-hour chart and aim to take this trendline break. Why this trendline break? Because this is the last trade developed on this up move. Right? A break below this trend line would open the doors for the down move to happen. Could this pair continue higher before it starts the down move? Yes. What levels should we be watching then? Here, this is a very important level, 136, 137 range, and then we have, of course, the 139. Actually, every 100 points from now are very important. As I said, for long run, I'm very bullish for this pair. For the short run, I see corrections. Corrections back to the opposite 20 MA, and that could take several weeks. The last news from China, and if this week will be positive in Australia with its own news, then we will most likely see the Euro Aussie dropping down. Same I expect to happen with the pound against the Australian, which also did a very impressive ride straight of 35 candles. We have beautiful continuing divergence, RSI for the second time in 20, several resistances on the range, as you can see, right? Several resistance on the row. This pair is reaching very extreme levels. Watching on a weekly chart, it's bend to bend and bit more, and also we have several resistances for this pair. Watching on a monthly chart, yes, I think up, and I think that for long run we will see the pound Australian here again around 2, above 2, but it will take time. Before that, I think down till the opposite Bollinger Bands. From there, I expect it to start another up move. That's my opinion for these pairs. How should it actually happen on the Australian dollar and Australian Canadian, for example? Well, Aussie dollar, you remember what I was talking about. Watching on a weekly chart, we will continue much lower. From here, two things could happen. That's a very impressive support level, very strong support level, but it still has a bit more to go. It still could go a bit more, right? Watching the trend line, next support. Well, where these lines came from? Let's erase them. Okay, two things could happen from here down to 094, 093 range, maybe even 092, and then a retrace, or alternatively a retrace of 200 up to 400 points right now, and then another wave down. And if I have to make some bet, I think the second way, retrace up and continuation to the downside right after that. Based on monthly chart, for the first time, it broke the Bollinger Bands to the downside. Every pullback inside the Bollinger Bands provide us a great sell opportunity, most likely. And for long run, maybe you will think I'm crazy now, but for very long run, okay, I'm talking for years now, I would not be surprised if the Aussie dollar will be back to this range. That's 0.70 plus again. Why? Because of this channel. Right? I know it does sound crazy right now, and I agree with you. It does sound crazy, but that's my opinion for the very, very, very long run. Aussie Canadian also could be a good opportunity to buy, but you do not have to overexpose of the Australian pair. So just choose your 2 positions, not more, 3 if you are very, 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 very conservative in your trades. Aussie Canadian, like the Aussie dollar, in my point of view, every pullback should be selling down. We have a beautiful Bollinger Bands break. I think we are going all the way to 0.97, 0.98 first of all right now, then we can go all the way to 0.93, 0.91, maybe even lower again. In my opinion, I'm very, very, very bearish for this pair. And that's about the Aussies pairs. And now some words about the majors. Well, as I told you not once, every pullback on the euro dollar, every pullback on the pound dollar should be sold. Now the euro dollar is very interesting. Why? Because it is creating a bearish hidden divergence. Is that all from here? Not sure. Every push up, if it comes, is an opportunity to sell. If you want to make conservative sell with a good break, that's what should be broken. This range has to be broken in order for the euro dollar to continue to the downside. If it's not broken, look to sell the highs. Every rally with intraday divergences or mid-term divergences like the 1 hour or the 4 hour chart should be taken to the downside. My opinion, very bearish for the euro. Pound dollar, pretty much same story. Every rally should be sold. Is that all for the pound dollar? I am not convinced. I think the pound dollar still has more to go up. I would say it this way: as long as this support will hold, look to buy the pound dollar. If this support will be broken, then it might be a bit riskier. It still could take us down to 150.70 again, but that's the bottom. Before that, I become very bearish again. So the first important level to hold is this one. The final level I could still accept is this one, around 150.70, maybe 150.60, not more. And then I think pound dollar is able to go up to 153 again, maybe even a bit higher. And then, of course, I think down again. This is my opinion. How should it affect on the euro pound? Talking about the cross, the major, sorry, that combined this cross. Well, it's a bit confusing, but if you want to make some aggressive entry, take a look here. It was broken and is holding below that right now, as you can see. A sell now with a small protection above this level, well, something like 25-30 pip stop loss, could provide us an opportunity to go for a sell and set this trend line as a target, which means by risking 25-30 points, we could take here something like 60 points drop down, 50-60 points drop down. Could be good attempt. Taking a look on a daily chart, it means it should drop down to the 20 MA. In my point of view, it should. And for long run, in my point of view, for longer run, I think the euro pound should go lower. The question is if from the current down move, or could it make another push up before making a strong continuation. For that, I don't have prediction yet. I think it's too early, but I'm definitely bearish for the very, very long run. So that's pretty much what I have to say about this pair for the short-term opportunity. Yen pairs. Well, the yen pairs, you know my opinion. I'm still on a bearish opinion. I still think we're going down, and we should be looking to sell the rallies. I do see 100 being reached. I do see 98 being reached. I do see even 95 5 being reached again. Then we'll have to see. Talking about the weekly chart, if and for any reason, I don't know what could happen with it, but if every new high is an opportunity to sell, as the Bollinger Bands, in my point of view, will take us back to this level again at least. And yes, I expect it to affect other yen pairs, euro yen, pound yen, etc. Well, I'm bearish on these pairs as well. And as I said, if we will get another push up, it will not change my mind for longer view. I think it will still bring us into the cycle. And I'm talking because of the monthly chart mainly. Every push up will take us then down to monthly 20 MA. That could happen already, so we will see. We'll see how it's acting. Dollar yen, by the way, as you can see, is retracing to the downside once RSI on the monthly came to its extreme. Again, maybe on this month we will see another attempt to push for new highs, but it is creating a top, and a drop down back to monthly 20 MA is only question of time. So from my point of view, every rally is sell opportunity, as long as the weekly divergence holds and a monthly bearish pressure holds as well. And how that should affect the indices, well, you know my opinion about the indices. I promised I will elaborate a bit more than I did in the beginning, so that's my view. As I said for several weeks actually now, the higher the worse. I have one problem with the current market condition. The candle pattern here is evening star. Evening star is not so much reliable when it comes with divergences. I'm not sure how it will actually affect. I do think down, and I do think every rally should be sold. Watching on the monthly chart again, exactly as the yen pairs, it's still for 1, 2, maybe 3 more months could it could play around this top before making something much bigger. So I'm not convinced how to eat this evening star. I definitely think down. Only question if it starts from here, or it could go for one more push before completing that. I think it will start from here. That's my opinion, and every rally should be sold as for now. And I will keep my opinion as long as Bernanke or any other central bank chairman will come with some new surprises. I keep my bearish opinion. And of course I'm talking about everything, S&P, Nasdaq, and the main one, as you know, that's my opinion, is of course the Swiss index. This one is the best in my point of view, the best sell opportunity. Every pull back up should be taken to the downside. I'm very bearish for that, and I think it's going down to this trend line at least, maybe even more. That's my opinion about the Swiss index. Two last opportunities: dollar ZAR, dollar Turkish. Watching on a daily chart, I think dollar ZAR created a top. That could be great opportunity to go and sell with this hammer back to the 20 MA, or even a bit more. Every push up from here will be just an opportunity to increase that. But I have one thing to tell you about that: dollar ZAR and dollar Turkish are very risky pairs. If you want to trade them, this is something to do without a stop loss, like an investment. That's the only way. If you cannot allow that to yourself, just ignore these pairs. Very simple. Okay? Don't force yourself take such trade if you cannot allow yourself the risk. I do think right from here it's going down. If for any reason it still will push a bit higher, 1040, 1060, then 11 are very important levels to pay attention to. I think from here down to the 20 MA, maybe even lower. I keep my bearish expectation. Take a look on the monthly chart. Monthly chart has more than 20 candles right, so don't be surprised if we will see the drop down again. For long run, I'm very bearish for dollars and dollar Turkish. One biggest advantage of them is that they pay wonderful swap when you sell them. And here's dollar Turkish finishing with such a strong doji. Should do pretty much the same and take us down to 20 MA, maybe even a bit more. Well, also monthly chart, that's pretty much the big story. On the next month, it will go and create a divergence. On the next month, several months, of course. After that, there is much more to drop. Dollar Turkish is wonderful swap pair, so you can go and hold this sell as investment. Yes, it could go to 190. Yes, it could go to 2. But after that, I expect it very long-term strong drop down that will allow us to enjoy from amazing percentage profit by the swap. And I would like to finish with one stock, and I'm talking about Berkshire of the famous investor Warren Buffett, of course. As much as I admire him, I think his stock is creating a top, and I do think watching on a weekly chart, according to the current divergence it has, continuing one, and the 20 candles right plus on the weekly chart, I think it's going to close the gap, which means I do expect it to drop down to something like 108 at least, probably even lower. And this is my opinion about this stock. That's my opinion also about the forex market, and I shared with you my main pairs. That's the opportunities where I think we should be concentrated. And one pair I forgot, sorry, that's the euro against the Canadian. I would say that if we go and reach 136, 135.50, 136 or a bit higher, pay attention to these levels. We might see some stop there, some weekly divergence to be created like a double top, and some drop down starting from there. Start to pay attention to this level. Euro CAD might create a top around 135.50 or 136, or maybe even a bit higher. I would be looking definitely for sell opportunities around these levels or higher, as I said. That would be all, friends. Thank you very much for taking time and watching this video. For those of you who are with me for the long-term opportunities, that the pound, New Zealandian, dollar ZAR, dollar Turkish now, Aussie New Zealandian, well, you know my opinion. It was important to me to update these trades that I was talking about for long run now. Once again, thank you very much for watching this video. Please feel free to share your comment on Facebook or on the blog. It will be much appreciated. If you like this video, also share with your friends, as of course my goal is exactly as yours, to make as many people as possible to enjoy this amazing market, the forex market. Thank you once again. Yours, Vladimir Ribakov.